Hi traders, Nathan.bray here from ACY Securities. Welcome to our Telegram review, our live interactive trading feed, where we send you out the key levels the markets are reaching throughout the week and the reasons why we could look for trading opportunities off those. Now, if you're not already in the Telegram, by all means, shoot me out an email on the email behind me or in the description of this video. Now, it's been an exciting week. So first of all, we had interest rates rising around the world. It started off on Melbourne Cup Day here in Australia, where I was talking about key levels of shorting the Aussie against the US dollar after they only raised interest rates by 25 basis points. Now, keep in mind, the economy's starting to get a little bit weaker, and we've also got this giant property bubble here that the economists may be concerned about, including the RBA. Now, across the world, we saw a 75 basis point rise in both by the Bank of England and by the Federal Reserve in the US. The thing I'd take away from what Jerome Powell came out and said was, yes, they're going to really try to tackle this rising inflation as aggressively as possible, but he did hint that they might be looking to ease that back in the coming meetings. So it should be interesting times ahead. Now let's take a look at the key levels that were broadcast out to you. Okay, traders, looking at the Aussie against the US dollar. This was the interest rate announcement day where we were looking for, also coinciding, of course, with the Melbourne Cup video and day that we did. So you had a broadcast out where we were looking for price to spike up into this daily and weekly resistance zone. Okay, and if you use your fib tool as well, we're looking at it saying, okay, from top to the previous bottom before this event occurred, of course, you can see it also coincided where price did rally to after the interest rate announcement came out with the 25 basis points. Price literally reached that resistance zone and that 79% retracement level before moving down from there just over 200 pips over the last few days. So that is the rationale, finding areas where you have multiple reasons for the potential for a trade setup and then using whatever entry criteria you're using to see if you can enter in at that particular level. Now, later on in the week, we had a look at this euro yen. So you can see on the euro yen, a very similar type approach where we're looking at daily resistance, so up around this 147.71 and around the 147 level on the next day. So if we were to use this resistance area and we got price rally back up to there, and if we use our fib tool as well, which is a really simple approach at getting consensus in your trading, if we go down, see the bottoms here, and suddenly we've got a scenario where that 147.69 multiple daily and weekly resistance levels coincides with the 79% fib retracement level. And we see price then this week fall all the way down about 350 pips. Now, if I zoom in on this, so let's try and move in on the 15-minute chart to get a better look at what it was like at the time when it was broadcast out. So you can see how it's moved down quite significantly. And there's the level there. So we're literally looking for a trendline break, perhaps a MACD cross. And if we just draw in our trend line there, you can see even if you're using that method, we've isolated the key level and we have a trend line break. We have our MACD crossing down all at the same time. Now, from there, price does move down and then we're looking for, well, if you missed that opportunity, Duncan was talking about this 147 even level here with this dotted red line at the figure. So you can see it also is just below the central pivot for the day. So we had price fail here and then we had price rally back up and retest. And of course it failed then for the rest of the week. So whether you saw the first broadcast at the high level or looked at an entry point on the next day, it did provide a number of those and moved down whether it be 250 pips or 350 pips, depending on your entry. And the final one I want to look at and review with you is the same scenario, but using the fact that the FOMC did raise rates at 75 basis points, which gave some strength to this already very strengthening and very strong US dollar. So on a weekly chart, you can see here's the level here, this major level of support at around this 99.50 level. Is that going to become resistance? Now, on a weekly chart, it never closes above that. We do get a rally, but we've got price literally failing to hold above it. So if I move down to the daily chart, and you can see the days here when it falls back below where I patented in this 99.50 level, we do get 2 days in a row where it rallies back up and starts to respect that resistance, which it had already broken above. So from there, we've had price move down a good 200 pips in the last few days. Now, if I zoom in and have a look at that, because remember, it's very volatile and that's something to take into account. Let's have a look and see two different interest rate announcements come out and look at it rally all the way back up. Even though the interest rate was positive, we did see a big sell-off here in the euro. Okay, and then the next day when the FOMC, we saw a big rally up almost to the same level. And even on the 15-minute chart, it couldn't close above that 99.50 level of resistance, providing an opportunity to trade that down. Well, if you aren't already in the Telegram, the live interactive trading feed that myself, Lenny and Duncan provide you those live updates throughout the week, please don't hesitate to give me an email or contact me on the contact details below. All right, nice to talk to you all. Good luck with your trading.